Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menashe. Today's another AMA episode. That is, Ask Me Anything. I love to answer your questions. If you've got a question you think is going to be of broad interest, send it in. I'll answer it live on the air. Send your questions to victor@victorjm.com. That's victor@victorjm.com. Julien from Cambridge, Massachusetts asks, should I get a real estate appraisal or a comparative market analysis? Julien, that's a great question. The simple answer is it depends on what you need it for. A comparable market analysis, or what's sometimes called a broker opinion of value, is a quick and simple approximation of the market value of a property. However, it's not of high enough quality for a lot of purposes, nor is it going to give you an accurate enough answer in all cases. Let's look at the different types of appraisals that can be ordered. And depending on how you constrain the appraisal, you can get a dramatically different result. So it's important to understand the details of what you're getting. Generally speaking, appraisers determine the value of a property using one of three different methods. Number 1, replacement cost. Number 2, comparable sales. And number 3, multiples of net income. The problem exists when the three methods don't agree. Which of the three do they select? Generally, the appraiser will choose the lowest of the three, but here too they need to apply judgment and discard the one or two that don't apply. The biggest problem in particular for commercial real estate is that in many cases there are no truly comparable properties in the same area. In those cases, a like-for-like comparison is truly impossible. If your property is, say, a 10-unit building, there might not be another 10-unit building in the same area. There might be a 12-unit, a 16-unit, a 20-unit. So what do you compare? Do you compare the price per unit? Do you compare the price per square foot? Are the properties truly comparable? Meaning, are they of a similar vintage, with similar levels of finish, and attracting a similar tenant base? If not, then they're not true comps. The appraiser will then look at replacement cost. They'll look at the finishes of the building and make a cost per square foot estimate to construct a new version of the same building today. Oftentimes, buildings are trading below construction costs because they might have been built a number of years ago, and the increase in value has not kept pace with the rising cost of new construction. And then finally, the third method is multiples of net income. This is where the property is valued on its ability to generate profit. That is, after all, why we real estate investors are in this business altogether. The appraiser will look at what, say, a B-class building is trading for in the area. It might be a 6.5% cap rate. They will then analyze the financials for the building and determine the income and expenses for the property based on a bank-approved model for properties in the area. But here's where things get tricky. Not all appraisals are created equal. They're not equal because they often serve different purposes. Imagine if a bank asks for an appraisal to value a property under fire sale conditions. What would this property sell for if the bank had to dump it on the market and get its money in under 30 days? That would give you a very different result than if the bank asked the appraiser to allow it to list for 6 months. Another purpose for an appraisal is for eminent domain. This is where the city is coming up with a value for a property on a specific date in the past, which is deemed to be the date when the eminent domain legislation passed in the legislature. Another reason for valuation might be to mediate a dispute between partners who are looking to sever a partnership, or perhaps for a married couple who are getting divorced. Since the property is not actually selling on the open market, the sale is being estimated. Sale prices have a range. Should the appraisal be constrained on the high side? Should it be constrained on the low side? It all depends on what the person asking for the appraisal is looking for. Sometimes, the appraisal is simply to justify the purchase price for a lender who's about to lend against a property. In that case, a buyer may have got a real bargain, but the appraiser is likely to list the purchase price as the appraised value, even if the market value is higher than the purchase price. Why would they do that? Well, you guessed it. The client for the appraisal is the bank, and that's what the bank instructed the appraiser to do. By now, you're probably getting the idea that the process of determining value is somewhat fluid. And if that's your conclusion, you'd be correct. Of all the methods, comparable market analysis is the weakest. If you're in a 400-unit high-rise building and all the units are the same, comp analysis is perfectly fine. Units on the higher floors will sell for a tiny bit more, but the basis for valuation is based on a large enough sample size to be valid. Now, while I haven't answered your question directly, I hope I've given you enough to think about what to ask for when you try to determine the value of a property. We've seen instances where appraisers are not perfect either. Some sale transactions are not listed on the MLS, and when that happens, appraisers have a hard time finding those transactions. They have to go to the county records to find them. Brokers also have a hard time finding them if they were not transacted through the MLS system. The simple answer to your question is to first get clear on the reason you need a valuation. The main reason to contact a broker for a valuation opinion is you're going to get an approximate idea of value without spending a lot of money. From there, you can order a much more detailed appraisal from a professional appraiser. Thank you, Julien, for a great question. As you think about that, have an awesome rest of your day. Go make some great things happen. We'll talk to you again tomorrow.